Buy a home today or wait for the housing market to crash? I think that is a question that is on many people's minds right now as they're looking at this real estate market and saying, wow, it is becoming more and more unaffordable because of these high prices and these higher interest rates. Well, for me, when I'm looking to answer this question, I like to go straight to the math. So I want to know, is it cheaper to own or is it cheaper to rent at this time, and how my capital will be better invested? So I actually found this really cool chart here on redfin.com, which I'm going to share with you here in a minute, and it breaks down the cost between owning versus renting, and it's very simplistic. You could probably get into a lot more details, but what's interesting here is it lets you look at everything on a national level and then brings it back down to a specific market of your choosing. Now, before we get into it, if I could ask a small favor, if you wouldn't mind hitting that like button and subscribing if you like all things finance, real estate, and investing. Without further ado, let's jump right to it. All right, so up on the screen, I have the link for the monthly rental market data here in Redfin's data center. I'll link to it in the show notes below. So if you want to do this in your market, you can go ahead and click on that link, pull it up, and I'll show you how to use it right now. So a couple things here. This is the monthly rental market data. This is renting versus owning, and it has a historical chart here, but it only goes back to about January of 2019, so it's a sample size of a few years. Now, the blue line is the average monthly rent, and the red line is the monthly mortgage payment. One thing I do not know, I looked at the data table, but they didn't specify. I think this might just be the mortgage payment, not including the taxes and insurance. So something to be aware of. The metro area, this is national, so across the United States, we'll leave the down payment at 5%. And then for me personally, you could click on this for sale property type. You can do anything that you want here, but I would prefer to look at just single family homes. This chart changes a little bit. So a 5% down mortgage, this red line, that would run you about $22.77 per month on average on a national level, versus the monthly rent would be just under $2,000 per month. So this is only about a $350 per month difference, roughly, between owning versus renting, according to this data here. Now, again, I don't know if that mortgage payment includes the taxes and the insurance, because when you click on the data table here, I'll go ahead and pull that up. It doesn't necessarily say that, but it just really shows that what your monthly mortgage payment is with 5% down, what the monthly mortgage payment would be with 20% down, and then the median sales price. This is coming directly from Redfin's analysis of MLS data, public records, and then the rent information is coming from RentPath. If we tab back over, what I want to do is bring it into a specific market so we can see what exactly is going on in, let's say, Sacramento, California. That is where I'm located. But I would encourage you to go ahead and select your own market so you can see exactly what is taking place there. Now, in the Sacramento market with 5% down, average mortgage payment is $31.42. with the average rent payment at $27.40. So now you're talking about a $500 per month difference. So the disparity is becoming greater and greater. So you have to ask yourself, it's like, is your capital being deployed into that house worth that extra expense versus renting? You know, are you going to get a better return owning versus holding that property as a rental? And so that's kind of the way I look at this. Now, you could make an argument that you're going to probably have a better tax deduction there with a home. You're going to have a portion of your monthly payment is going to go towards the principal balance. And some of those factors are going to allow you to justify paying $500 per month to own that property as opposed to renting. So I'm not saying it's a bad idea or it's like, oh, it's cheaper to rent, automatically do that. Every situation is different. Personal finance is personal. But this is a good just barometer for the market just to kind of see like, hey, you know, what's going on over here? Is it cheaper to rent? Is it cheaper to buy? You know, where are my dollars better invested? The other thing you can do is increase the down payment. So let's say you want to see what it looks like with a 10% down payment. Update it to 10%, and all of a sudden that gap is closing. So rent stays at $27.40. That's the average right now. And then the average mortgage payment goes down to $29.77. So now you're looking at this and like, okay, if I were to save up 10% and put that down on a property, then my mortgage payment will be similar to what I'd be paying in rent anyway. Now I'm all of a sudden building equity. I'm likely going to be getting a better tax deduction. And of course, we have the peace of mind and security knowing that we own this property. We're not going to have to move every year or two, depending on, whatever mood the landlord is in at that time. There's definitely some benefits there, and you can tweak these numbers and play with them a little bit and gear them towards your specific situation so you can make an educated decision. One thing I noticed that was cool is when you click on this data table, I'm going to scroll down to the Sacramento region and just show you the numbers that they're actually using. And now this is an average, and you can always adjust this for your specific market or your specific scenario. And I would encourage you to do that rather than just looking at this blindly. Again, this is just a cool thing to play around with. But a single family home in Sacramento says average rent is $27.40. That's year-over-year rent growth of 14.9%. The mortgage payment would be $31.42 with 5% down, and that's based on a median sales price of $617,500. So you could also do a rough calculation there and figure out if taxes and insurance are included in that monthly payment. I suspect they're likely not. So this is skewed slightly in that regard. You're going to want to make sure you account for that as well. Very important. Anyway, that is going to wrap it up for today's video. If you found this information useful, please consider smashing that like button, subscribing, and leave a comment below. The comments really help me as well as others learn and grow, and I certainly do appreciate it. Thank you so much. We'll see you on the next video.